they've replicated this infrastructure. And so a lot of the wealth that's been generated in crypto is because you own a crypto exchange, or you own a lender set. Now that's all imploding. It's kind of a replay of 2008, except instead of Bear Stearns, Lehman Brothers, Fannie Mae, Freddie Mac, and Morgan Stanley was hanging by a thread. It's FTX most prominently, but Genesis is kind of considering bankruptcy, etc. So all that is collapsing. So Bitcoin's not an exchange. It's not part of that infrastructure. It's just a coin. The best analogy I've been able to come up with, Danielle, I mean, I have a lot more to say about it coming out of communications theory, but it's like a casino chip. If I walk into a casino and put my money on the roulette table and the croupier gives me chips, I can gamble them, I can play with them, I can make money or lose money. But when I leave, I go to the cashier and get my dollars back and walk out. If I take the chips outside the casino, they're worthless. I can't pay for dinner with casino chips. So cryptocurrencies are casino chips. You're in the crypto casino. Some people made a lot of money, and I know some of them personally. A lot of people have lost a lot of money. More have lost than made money, which is how casinos work, by the way. So eventually they'll all go to zero, but in stages. But what's collapsing right now is the infrastructure. It's a great question, and we have the data. Now, China's non-transparent. Russia is much more transparent, although Russia is starting to be opaque a little bit because they're in a war. But you can see the inflection point is 2010. So from 1970 to 2010, it's a long stretch, 40 years, central banks were net sellers. It didn't mean everybody sold everything, but Switzerland's down 1,000 tons, U.S. was down 1,000 tons after losing 8,000 tons, or sorry, 11,000 tons between 1950 and 1970. It was down, down, down. 2010 was the year that central banks became net buyers. Now, it doesn't mean every central bank was buying gold. It does mean that they were selling a lot less and others were buying more. And some of the buyers are Mexico, Kazakhstan, Philippines, Vietnam. We know China's a big buyer. We don't know exactly how much. Russia was a big buyer. That is continuing. Now the new players, Iran's non-transparent, but we know they're buying gold. Turkey is buying a lot of gold. Japan had a bunch of gold all along. They never told anybody about. Literally 1 month, their reserves went from 600 tons to 900 tons. Well, you know the market. You can't buy 300 tons in a month, not one country in one order. But they had it all along, but they decided to reveal it, put it on their balance sheet. So Americans don't seem to like gold. I'm not sure Canadians feel much differently, or others around the world. But central banks sure do, and I think that tells you something. They're preparing for what we're talking about, which is a world where the dollar as a reserve currency will not be deposed overnight. But as a payment currency, there's a difference between a reserve currency and a payment currency. Anything can be a payment currency. If I want to pay you with baseball cards and bottle caps and you're okay with that, then it's a currency. So when we see the BRICS Plus, the Shanghai Cooperation Organization, OPEC Plus, China individually, all these countries are the Eurasian European Economic Union, which is Putin's answer to the EU. All of these organizations are working on new payment systems right now, and they're going to start to roll them out this year and later. So that's going to be a radical change in how we pay for things. Right. Yeah, it took 30 years for sterling to be run off the road. It started in 1914, and with World War I, it was completed in 1944 with Bretton Woods. So that the dollar did displace sterling, but it took 30 years. The thing is, people don't understand reserve currency. It's not as if the People's Bank of China has pallets of $100 bills stacked up in the basement. Reserve currency means a currency of denomination of securities. So what China does have are treasury bills and treasury notes. So the key to being reserve currency is not the currency, it's the bond market. Do you have a large, safe, liquid bond market? And if you do, then people will buy those bonds. What else are they going to do with the money? But that's much harder to replicate. Well, they can have a currency backed by gold, at least not the Chinese yuan, because the problem is there is no Chinese yuan bond market of any size, number one. Number two, they have no rule of law. I mean, no, I wouldn't trust the Chinese or the Russians for that matter. And the U.S., the problem with the U.S. is that we had a good thing going. I've always said the world will not destroy the dollar. The United States will destroy the dollar. through our own policy blunders. And when you freeze the assets of the Central Bank of Russia, I don't want to debate the war in Ukraine, that's a big subject, but when we freeze the assets of the Central Bank in Russia, and you're the Central Bank of Turkey, Saudi Arabia, China, you're like, hey, how do I know that next week the U.S. isn't going to not like something I did? Are they going to freeze my assets?
Right.
So little by little, yeah, at the margin, you get out of Treasury notes, you get out of euros for that matter, and get into gold. So there is this displacement effect going on, and it wouldn't surprise me to see China announce a big bump, maybe 500 tons or more in their gold reserve. I would say they already have it, they just haven't announced it.